Here we go. Welcome everyone. This is Gary Carpenter, and today Al Hoffman's with me, and we're going to talk about Federal Plus loans. And of course, this is being brought to you by the CollegeProcess.org. Now, Plus loan is available to every parent of a student who has filed the federal application for free student aid, or the FAFSA form. Important thing here is to remember that only one of the parents can apply for the loan. And because there's some benefits to it, which we're going to talk about in a few minutes, we're going to want to determine which parent should apply for the loan depending on their health. So again, one parent applies for the loan. Next item, it's a credit-based loan. Just filing the FAFSA form, you're not automatically going to get the loan. It's just one of the steps in the application process. The next step is to go online to fill out an application, submit it to the Department of Education. They come back almost instantaneous with either an acceptance or a denial. And many families say, how can they do that so quickly? Well, what they're doing is they're looking at the credit score of the individual that's applying for the loan. Also, this loan has a fixed rate, and for 2017-2018, that rate is 7%. In addition, there's an origination fee of a little over 4.25%. So let me give you an example on that. Let's say you're borrowing $10,000, okay? They're going to take 4.25 roughly from that, or about $427 they're going to deduct from that $10,000. So the amount of the money that'll actually go directly to the school is going to be about $9,572. So this is important when you're determining how much you're going to have to borrow for school. You need to remember that there's a 4.25% fee that you want to add on to it. So if you need like $10,000, you're going to probably have to borrow somewhere in the area of $10,500, because in order to get $10,000 after the fee, you have to get the higher number. Also, there's 3 options with this loan as far as repayment. And let me explain briefly how the disbursement repayment program goes. You apply for the loan usually in the summer, and you apply for the whole year. You get half of the loan in September for the fall semester, and then in January you get the other half of the loan for the spring semester. Once that final disbursement's made, within 60 days after that, one of the options are you can start to pay back the loan immediately with equal monthly payments over a term of 10 years. The other 2 options are, 1, you can pay interest only while the student's in school, then start to pay equal monthly payments over 10 years after the student gets out of school. And the third and final option is you can defer all payments until after the student gets out of school. And they give you a 6-month grace period after they got out of school before you have to start making payments. Then those payments are for 10 years going forward. Now, on that last option, because you're not paying interest on the loan while the child's in school, that interest is accruing. So let's take our $10,000 example. At 7% interest, it's going to be $700 for the first year, another $700 for the second year. You're going to be up close to an additional $2,500, $3,000 in interest that's accrued on this loan when they go and graduate. So what they're going to do is they're going to take the original $10,000, they're going to take this interest and capitalize it, so you'll not have a loan of $13,000 you have to pay back instead of the original $10,000. The other item I wanted to point out, and this is going to go back to the first item about which parent is taking the loan, is there is a death and disability benefit. And what this is that if the borrower dies or becomes totally disabled, the loan is going to be forgiven. It's not a tax-free forgiveness. You're going to have to pay taxes on the forgiveness of debt, but it is going to be forgiven. Also, one of the reasons why the origination fee is so high on this loan is that it's helping to fund this death and disability benefit. Now, when you apply for the loan, there is no question or investigation as far as the health of the borrower. That they have no interest in whatsoever. So when you determine which parent's going to take the loan, you look at, well, of the two parents, who's in the poorer health? That's the one that takes the loan. If they're both in good health, then you look at the family longevity, and the parent that has the shortest family longevity would take the loan. Okay, just to wrap up here real quickly, what's the amount of a PLUS loan you can take? It can be the total cost of college, less any financial aid or other loans. So a quick example, $50,000 a year is the cost of college. The student gets a $5,500 Stafford loan, gets let's say a $10,000 scholarship on top of that. So the amount they could borrow is the $50,000 minus the loan and minus a scholarship, or about $34,500. Also, this loan is going to qualify for the student interest loan deduction, which the parent can take because the loan is in the parent's name. And as long as the parent's making the payments, they can take the deduction. Now, it can be up to $2,500 a year, and there are income phase-out limits. I believe this year, once your adjusted gross income is above 130, it starts to phase out. Once it gets to $160,000, it's no longer available. And you do not have to itemize deductions to take this deduction. Right on the front of the 1040 or the 1040A, there is a line on the front page that says student interest loan deduction. You just drop it in there. And finally, this loan is going to qualify for the Federal Loan Consolidation Program, meaning when the student gets out of school, you can consolidate one loan or multiple loans and have the option of possibly extending the term instead of 10 years up to 30 years, depending on the amount that's being consolidated. That's all I have right now. Al, can you think of anything?
Yeah, would you go back to that very first slide, Gary? I think about the question I get, gosh, a lot. And in one parent's name. So I know it clearly says one parent's name, but no, grandparents cannot get this loan, correct?
That is correct. I get the question too, and I always go back and I say, well, let's read it out completely. It's a parent loan for undergraduate students, and therefore only the parent can take the loan out.
Outside of that, I'm good, Gary.
Okay. Oh, one other thing I did remember. You apply for a PLUS loan every year the student goes to school. So every year in the summertime, you're going to be applying for a PLUS loan for the upcoming academic year.
I'm going to complete a new master promissory note for each year.
That's correct. Okay. That wraps it up, Al. Thanks, everyone, for your time. And, of course, here's our contact information if you do have any questions. Have a good day now.